The strongest performing market again was Sydney, values up 1.2% over the month, and we saw values rise in Sydney, Melbourne, Adelaide, Canberra and Darwin. The other three capital cities saw values fall, and the weakest performing market was Perth, where values fell by 2.2%. What we're finding is rental yields are generally falling, particularly in Sydney and Melbourne, where capital growth has been stronger. So over the last year, values in Sydney are up more than 13.5%, in Melbourne they're up more than 7%, and we're seeing really very low yields. We also know at the other end of the spectrum, investor activity is extremely high, so it suggests that a lot of the investors in the market are chasing that capital growth and not focusing too much on rental returns. The impact of the low interest rates is generally likely to be positive, but maybe not so much as we've seen in the past, because as you said, we're at unprecedented low levels already, and we've already had 2.5 years or more of capital growth in the current phase. But I think Sydney and Melbourne will probably feel the biggest impact of those cuts to interest rates. Since they were cut at the start of February, we've seen consistently auction clearance rates in Sydney above 80% each week, and in Melbourne they've moved from around the low 70% mark to the high 70% mark. So whilst you might get a little bit more activity in the other capital cities, Sydney and Melbourne are likely to be the main benefactors of the lower interest rates. I think capital gains in Sydney and Melbourne will continue. We've seen a positive reaction to the low interest rates in terms of buyer demand through February, and even if we don't get a further cut in March, I do think that more cuts are around the corner. Our view at the start of the year was that Sydney home values would probably increase 5 to 7% this year, Melbourne 3 to 5%. It's looking like it might be a little bit higher at this stage, but of course a lot can change throughout 12 months. But both of those results would still mean that home values have increased over the year. So I think there is still further to run. I think interest rates will go lower, and that will bid up values even further this year. Auction clearance rates have bounced since the Reserve Bank cut interest rates in the start of February. They're now at very high levels, particularly in Sydney and Melbourne. I think we'll continue to see that momentum carried through to around Easter of this year, maybe a little bit longer than that, particularly if we do get another interest rate cut over the next few months. But we'll still see that lull period through winter. That's a phenomenon we always see. And then the real test for the market after that will be what happens with volumes, and obviously also the clearance rates once we hit spring. The investor segment of the markets in Sydney making up almost 50% at the moment, a bit lower in Melbourne, it's about 44%. But investors are a major driving force in the market at the moment, so agents do need to target that. One of the other interesting things is investors are at these levels despite the fact that yields are pretty much at their record low levels. So it suggests the type of investor that's active in the market is chasing capital growth and not really focusing too much on rental return.